Yeah, look, we've basically been presenting at a conference recently, and I highlighted a chart that shows a huge compression of dividend yields, all sort of focused around that 4.5% dividend yield. And I noted to the conference that the last time I'd seen anything like this, showing my age, was sort of in the late 80s, early 90s recession. So I think, the point is all the low-hanging fruit might sort of be taken by now. And so what we're focusing on is companies that have got growth of equity, income, as well as the ability to pay a higher dividend. Some people refer to that as industrial yield, and we see that as a major ongoing theme. So do we think the banks, for interest, are attractive here? We have been underweight banks in our portfolios for the last probably year and a half, with an overweight to NAB for a whole bunch of reasons. But if you look at the general bank yield, I really feel that it is still attractive, especially after this fall. But it doesn't come into that camp of sort of companies that we'll pick up on in a minute, which is industrial yield, higher growth of earnings, which is very rare, with an increased probability of dividend payout. So just to give you a really rough idea, we're looking, say, 2 to 4%, maybe 5% maximum EPS growth in the banks, able to maintain a dividend with payout ratios around 70%, but we don't see that going up. So maintainable dividends, not growing dividend yields in that sector. With Telstra, it's a similar story, although perhaps a little bit more growth coming from that sector than, say, the banks. And then, industrial yields is where we're really focusing our main attention. If you look at a company like APA, we see that as a major growth entity. We think that the company's been very conservative on their guidance. They're paying a very reasonable dividend yield, but we see that growing because we see the growth in that business, especially from the coal and the LNG gas, as being very, very reasonably priced and not overestimated by the market at all. So we see conservative guidance and a high leverage to growth in that business. So that would be one of the stocks that we would say would be giving us both earnings growth and additional yield over time.